Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Vechain, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you'll be kept up to date with all the videos that we do here at Cheeky Crypto. Okay, if you have yet to join us in Discord, why not go ahead and check it out? It links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And of course, you know, if you're looking for a little bit more from the crypto space, whether that's bear market strategies, project reviews, or trading, why not check out the Patreon as well? Links in the description below. Okay, let's get into this, right? So Vechain paired up with USDT on the hourly chart. Binance is the data source, and you know, we actually did overextend beyond where I was thinking as per yesterday's video. You can see we actually consolidated quite heavily down on 3972. We did lose the previous low of 3908, so that is unfortunate, and we'll talk about that in a moment on a larger scale. And of course, we've come all the way down here to the 1.382, just below, and then bounced on up. Okay, so we effectively hit all of my targets down here pretty much in one day, which was unfortunate, but that is the way that the cookie crumbles sometimes. Now, I want to focus in on this bounce that's happened. I want to just kind of get a good grasp over what is happening here, so that we can be a little bit prepared for what might actually come next. Okay, so I'm just going to move this over, just going to park it over the side here, but we're going to just make sure I get that right on the nose there. Okay, so we've moved up just short of the 1.236, a little overextension there, but nothing too much. You can see the resistance really came in at 4.279, and we haven't been able to close above that. Okay, so that's kind of your 1-to-1 ratio as it stands, a giant A, B, and C, just like so. Okay, so nothing special, and we are looking for this pullback right now. Here we can see the stochastic RSI has quite the way to go into this oversold area before we can maybe start thinking about a good progression up. Now, the concern here is that this is a push upwards, and then a deeper pullback down. Okay, we know it's an ABC, so it's possible that this actually then starts to take us down a little bit lower, but again, it would actually break the structure of this overall pattern that we have from here. Okay, so if we think of this, we've got 5, we've got 5 coming down. So basically it's a 535 corrective play. I will go ahead and remove that and put the zigzag ABC in. A, B, and C. Okay, so we know that that's a 535 corrective play, just taking us down ever so slightly lower, and that is done. Then, of course, we have this ABC function coming up, or this WXY just going up here. Pretty standard corrective play, but we are looking for that pullback. Now, when we take a look at the 4-hourly stochastic RSI, if it will load, there we go. We've actually got some progression here, but it doesn't look like we're going to see too much of it, and possibly pull back down. It all depends on the kind of momentum behind the price. If we throw the volume in here, you can see that there was a little bit of buying pressure here, but it is dwindling back down. If we take a look at that on the hourly, you can see here that basically we'll pretty much increasing the volume as we're coming down, and then basically we had one really big push, and then basically the volume drops down again as the price pushes up. So the momentum isn't there. It's not really a buying atmosphere right now. There's a lot of fear in the space. With that being said, though, this is where the gains are made. I spoke about this before, and I'll speak about it again on the larger time frame in a moment. The 8-hourly has progressed up a little bit here, so again, that's got a lot of work to do, and the daily is actually looking to come down, so that's exactly what we want, as long with the weekly. So there's a little bit more downside to have here, but I would expect a bit of a higher bounce. What I would hope for at this particular stage would be that this is just an A, we pull back, and we have another kind of move up a little bit higher, and that basically lifts up the 4-hourly, the 8-hourly stochastic RSIs, and hopefully doesn't affect the daily too much, and then we pull back down, going down a little bit deeper into another correction. That would allow us to then get into a really sweet spot. Now, I don't have any levels of prediction on where that's going to go just yet. We need to see how high this bounce goes, and then we could articulate this maybe as a giant kind of A. This kind of is a bounce, and then this kind of takes us down into a bit of a zone, and we can kind of be predictive about it, but we don't know this until we get that final move coming in here with this particular bounce going up. So wherever that might land, it will tell us where we are likely to go next from a probability perspective. Now, let's jump up into that larger time frame, right? because obviously we did lose this low point that we had over here in February. So if we take a look at that from a macro scale, this actually now looking like a very complex corrective play. So we are probably looking at some kind of double three, okay, or triple three, depending on how you want to look at it. I guess a triple three might be a really good way of articulating that. Basically, you end up with a move that looks like, if I use the right terminology here, grab this, we pull in with a W, this being our X, this being our Y, this being another X, and then we pull back down into a deeper Z. Okay, that would then actually mark out the entire correction, and then that in itself would be, you know, a very bearish low, right? And it's important that we acknowledge the different kind of scenarios. Now we know that's a correction through the correct use of the tools here, but again, it can lead people into feeling like we are in a bear market. But I do want to kind of reassure people that ultimately, with that that terminology of correction, it just means that it's not a trend, which means long term, even though this has been going on for a while, long term, that is not a trend. It is basically just a corrective phase. Okay, so you can call it a bear market, you can call it a bear phase, you can call it what you want. It doesn't really matter. The main objective of this conversation really is that this is corrective, meaning that it's not trend, which means that it's not likely to go down significantly lower than these kind of low points that we're kind of highlighting. You know, in the same way that we didn't really have a trend to the upside because we fell short of making this a trend. So it's again corrective up during 2021 as well. Short term, okay, so trends are usually something that lasts a significant period of time, and you know, you could argue that inside a smaller time frame, this was a trend and this was a trend, with this being a correction, okay? But on the macro scale of things, the entire thing was just corrective and short term, okay? So it all depends on what scale you look at. If you're ever in doubt, zoom out and you can kind of see the bigger picture. Now, in terms of bear markets, yeah, I can totally get why people would want to call this a bear market. We've already retraced significantly now down to the lows down here at 86%. If we are to talk about dropping down any lower, which we don't know how low that's going to go just yet, you know, you could be talking about 90%. I don't think, though, 95% is something that we'll see anymore. I think this bear market low is coming in at the bottom of this Z wave, so just watch out for that. I think essentially dollar cost averaging isn't a really good idea anywhere around these points, in my opinion. But that's all it is. I'm not a financial advisor. I can't give you financial advice. What I can say is how much discount is enough discount, right? 86% discount from all-time high is very, very significant, right? That's a fantastic dip to be buying, if you kind of catch my drift. Now, you could of course hold out and hope that you go down to 90%. You could of course hope that you go down to 95%, but a lot of that starts to get more and more hopium into the market as we start thinking about wanting to get those prices down. It's the same scenario when people talk about Bitcoin going down to some stupidly low numbers. That is just pure hopium, in the same way that you have hopium saying that Bitcoin's going up to $500,000, right? So it's important that we understand that hopium goes both ways, but just really reflect on how much discount you think is actually a decent amount of discount to have here from previous all-time highs. What do you think the next all-time high is likely to be? Where do you think the market will go? What is your time horizon? How long do you want to be invested for? And do you think investing, or starting to invest, or starting to think about dollar cost averaging into a position is a good idea or a bad idea? Let me know in the comments down below what your intentions are. For me personally, I'm going to start dollar cost averaging really, really soon, and I think I'm going to start building up some pretty good positions in many different altcoins, because that is where the real money is made. It would be great to kind of, you know, see those kind of levels of gains with Bitcoin, but as we know, Bitcoin in 2021 only made 2,000% in gains, where something like Matic made 48,000% in gains, right? So it's really important that we understand that this is a point of doing research, this is a point to engage in communities and to start to actually do that fundamental research on what you think is going to be a really strong project going further forward, and then reflect on the fact that we've got really good discounts from those previous all-time highs. And if we have a long enough time horizon, we could see future gains that are going to basically multiply our portfolios very, very significantly. It is times like these where crypto millionaires are made. When we get into these true retracements of these true bearish scenarios where we have this incredible discount available for purchase. Guys, I'm going to leave the video there. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.